stocks which are looking upbeat to us for the next week, followed by a quick feedback poll on the presentation. Then at the end, we'll talk about anything which is related, undiscussed, or if you have any queries using that Q&A tab, you can ask your questions. So let's start with a quick disclaimer first that the idea behind this webinar is to share the insight. It's not a trading or investment recommendation. So before making a decision based on the information shared, please check with your financial advisors. All right, so consolidation for the second consecutive week. But finally, today we saw that Nifty could manage to surpass the hurdle at 21,800 mark. We've ended around 21,900. So it's definitely a break that we were anticipating in the market last 2 weeks. But on a weekly basis, we've managed to end with a gain of nearly 1%. On sectoral front, both sides we saw movement like defensives, which were taking lead for the last 3 weeks. It was slightly on the back foot, and the sectors which were not participating yet, like IT, banking, they made some contribution. But IT is largely the one which contributed maximum. Among the sectoral front, nearly 5% kind of a gains, followed by realty, energy, auto, and metals. Banking selectively, PSU banks were the one who were actually witnessing traction. Private banking majors still the same tone. Mixed trend continuing for last 4 weeks now. Then marginal profit taking in FMCG, media, and financial services are also witnessed. Talking about top 5 gainers and losers, 2 names from the auto basket, 2 names from the IT basket, and 1, of course, Reliance Industries. So Hero MotoCo and Bajaj Auto, they've done pretty well. Hero MotoCo, exceptional move, means within the two-wheeler space, till last 3 months, we were seeing that the stock was, underperforming. And in the last, the kind of run-up that we are seeing in Hero MotoCo now, it's a very strong catch-up move. And in the entire auto space, only Maruti is the one which is not participating. Eicher is slightly also witnessing, consolidation. But the rest of the pack is still, trading upbeat. In the IT, HCL Tech, we have been kept on discussing this over this webinar also, that within the IT pack, we like HCL Tech. It's the only stock within the IT major basket which is trading at the record high. And today, before the numbers also, it made a new record high. And on a weekly basis, gained nearly 9%. Same holds true for Infosys. Strong performance. Reliance Industries, when both IT or bankings were on the back foot, it was Reliance which is holding the market. At the same time, FMCG counters like normal profit taking, Nestle, HUL. Then we have Bajaj Finserv from the financial basket. Divis, marginal retracement, and UPL is the only candidate from the Nifty 50 basket which is still reeling under pressure and trading below the long-term averages. So there is no change in trend in UPL. Now, what we are anticipating after this consolidation breakout. So this is the daily graph of Nifty, and this is what we were doing for last 2 weeks, a narrow range consolidation. Good part is that we were holding up this yellow line, that is 20 EMA. So now, since we have ended this consolidation with a breakout with this green candle on Friday, we expect this upward momentum, this overall uptrend to continue. And 22,150 that we have kept on mentioning the target once we cross 21,800 mark, 22,150 is something that we were eyeing. Now we are approaching towards that mark is what charts are indicating. And once we cross that mark, obviously then 22,500 is also possible in the coming weeks. So downside like this level, the 21,500 we mentioned that is continue to act as a strong support area. So market respected the same last week also, though we have penetrated the same for brief on the intraday basis, but on the closing basis we managed to hold that mark. So this zone will continue to act as the immediate support in case if the momentum completely derails and we see profit taking. And then of course this retracement zone close around 21,150. So broadly, the kind of close that we have, indications of index testing toward 21,150 is high. But yes, since we have started we have started the earning season now, so volatility is going to remain on the higher side. So barring banking, wherein we are seeing select participation, and media, wherein still there is no clarity in the trend, we should be focusing on the other sectors. But on the stock specific front, since the volatility always remains high during earnings, so maintain strict stop losses, despite the ongoing positive trend in the index. So it might be a possibility that the index is going higher, but due to the earning announcement or result expectations, your stock might be sliding lower or higher depending upon the earnings. So during earnings, and otherwise also, is something that is prudent. It's not necessary that the stock is going to follow the market trend. So here risk management becomes more critical, despite the underlying trend being positive. So keeping that all in mind, the tone is positive. Barring media and select bankings, one should be looking for buying opportunities uh, across sectors, and broader indices, they are also doing well. So obviously, but one needs to be selective because we are not seeing the similar kind of participation which we were seeing it earlier. So one needs to be selective in the broader indices as well. Next come the important part, that is banking, because if you remember that last week we were discussing about IT, large cap IT names, and banking, which were uh, pushing the market slower or keeping the upside capped in the index. This time IT is out of the picture, means we have seen IT being the top performer among the sectoral front. Banking is still on the back foot, and why? Because again, the private banking majors, SDFC, Kotak, they are sitting on the sidelines witnessing decline. Axis, ICICI, IndusInd Bank, they are holding strong. So when the private banking majors, we don't see the alignment within the sector, it becomes very difficult for the index to make a meaningful move. So as of now, what charts are indicating on the index front, as of now, it looks like a distribution pattern. To be honest, you might have heard of this pattern called head and shoulder. So this is the left shoulder, this is the head in, and this is the right shoulder in formation. So to negate this means, to overcome this negativity, we need to cross this 48,400 mark, the this area, and then this overall buoyancy that we are seeing, we'll see that banking is also aligned with the trend. So as of now, we feel that in the next week also, at least initially, the underperformance may continue from the banking space. So now the IT majors, Reliance, select FMCG stocks, of course, means other sectors other than the private banking majors would dictate the trend, is something which charts are indicating. Once we cross 48, 400, 500 mark, then obviously a new high, 49,000, 49,000 plus level is something that Bank Nifty can heads to. Downside, this red line, first red line, which is around 46,900, that will be the first area of support. And if we fail to hold this, then this previous consolidation top, which is close to around 46,300, that will be the area of support. So what we should do in banking when it comes to the index, obviously one needs to be very level specific. So means at the higher end, around 48,400, we might again see witness profit taking coming in. So look for shorting opportunity when it comes to the index. Buying any dip towards 47,000, 47,200 zone, that might result in some buying interest emerging. So as of now, we feel that among these two, like Nifty and banking, Nifty has a comparatively better structure to look at. So 2250 is something that we are eyeing. So among these stocks, one can prefer Nifty for the positional trades. Now, after the key indices, what all stocks that one can focus? The first one on the list, we have Crompton. So Crompton is basically underperforming for last several months, but the last 2 months of consolidation has resulted in formation of a reversal pattern. This you can see on charts. This is a ascending triangle formation that bullish in nature. And what has happened is that we have overcome the upper band, plus we have reclaimed the averages, this you know 100 and 200 EMA on the weekly charts. Now the next hurdle is at this declining trend line, which is around 330, 328 area. Once we cross that, we have a confirmed reversal in this stock, which could help the stock to inch towards 360, 370 area. This is one stock that one can keep on radar in a market like this, wherein we are already trading at the record highs, and it's become very difficult to identify the potential gainers now. This is first stock on the list that we like. Second, Havells, nearly 2 years of consolidation in this range, 1100, 1450. That's the broader range. This week we have tested the upper band again, so we might see some consolidation, but possibility of making the newer highs or ending this consolidation seems much visible considering the kind of volumes and price action that we are seeing now. So this is once a stock that one can look for accumulation. It's not an outright buy. One can look for accumulation in this stock, and once we manage to surpass and sustain above 1450, 1750 to 1800 will be the probable target for the stock. Third stock on the list, we have Infosys. So IT as a sector, like we have been discussing this for quite some time, that we are not seeing the underperformance continuing in this sector, for the obvious reason, because we have had indications from the sector majors like Infosys, TCS. They have started making higher lows already. So after this breakout from this declining channel in Infosys, we saw this consolidation in a very narrow range, followed by a uptick, and then again like 3-4 weeks of consolidation, followed by a strong up move this week. So we feel that since the overhang of this result season is over for Infosys, we expect this momentum to strengthen further. SCL Techs remains our preferred bet when it comes to the IT majors. Still, despite the kind of move that we are seeing, the stock is trading at the record highs. Infosys, we expect this, the catch-up move, in the stock to see like in the near future. So this is one stock that one can look for accumulation within the IT major basket. So Infosys, TCS, SCL Tech. Avoid Wipro for a time being now, though we are seeing decent traction in Wipro also, recovery also, but the underperformance might continue. So here we are preferring the top names based on the relative strength. So just to sum it up, among these indices, we certainly feel that Nifty has comparatively higher strength. 22,150 is what we are eyeing. Once we cross that mark, then 22,500 also is possible. The earlier support zones remains intact, so 21,500, 21,150. Banking is still a laggard. We need decisive close above this 48,400 mark, this zone, to negate this distribution. Meanwhile, yes, one can selectively look at the private banking majors also, like Axis and ICICI. They are the better names to look at within the private banking basket. Apart from that, stocks that we've talked about is Crompton, Havells, and Infosys, which looks good to us. So this is all from the presentation part. We'll have a quick poll. So please fill in your feedback, and then you can start posting your question using that Q&A tab. Please write your question in the Q&A tab instead of using that raise an option button. If you're done with the feedback, you can start posting your questions. All right, so let's start with Q&A now. Okay, his first question from Mr. Aya, that why specialty chemical. Okay, so why specialty chemical sectors underperform this week? So see, last week we discussed about this in detail, that we are seeing early sign of recovery in specialty chemical and the chemical sector overall also, but it's not a clear cut trend reversal yet. And within this space also, like, some of these names, they have started doing well already. Means Aarti Industries, has witnessed sharp recovery in the past. But at the same time, we are seeing select stock like Naveen Fluorine and PI Industries, which are reeling under pressure. So it's not a broad based participation that we are seeing within this space. Aarti, Deepak Nitrate, Tata Chemicals. These are some of the name which are, positionally looks strong to us. Rest of the names, I feel that that might, take more time, means maybe a month or two to consolidate further before any meaningful move. So prefer those names which are aligned with the overall move. So Deepak and Aarti Industries, uh, Tata Chemicals. These are the top three preferred names that we like. Yes, see, I request you to please avoid any stock specific questions so that we can end this webinar on time. And yes, so next we have Mr. AR on cement sector. So cement as a sector is still doing well. It's more of like a beather that we are seeing in this space. Ultratech, Ramco, Dalmia, India Cement, but the tone is still positive for the entire space. In fact, yes, ACC Ambuja, now we are seeing catch up moves, so it's a different story altogether. But the rest of the pack, we feel that barring a couple of names, we are still seeing a positive momentum continuing. So if you are looking for accumulation, then it's a good time to look for accumulation in the top performing names. So Ramco, Dalmia, and Ultratech, these are the top three preferred names based on the recent past performance within the cement space. See, again, I would request to please refrain from asking any question related to any particular stock, but we can talk about sector in detail. So, like we talked about IT majors, the preferences in the mid cap IT space, of course, Persistent, Birlasoft, and Emphasis. These are the top three names that we like. Uh, but since we have seen, yes, you can include Tech Mahindra also to that list. LTI, LTIM, they are also doing well, but the upside seems capped in those names. So one can selectively look for accumulation on dips in these names. So, Mr. Balasaheb, if you are associated with us with Religare, then obviously you can connect with us through your branch or your business partner, and they can recommend you multiple profitable strategies and trading ideas during the day. Okay, so Mr. Avik Angli has a question, sir. You mentioned how Fibonacci sequence can be used to predict price. Can you recommend any book or video? So, though is out of the purview of this webinar, that I guess we have discussed this about the Fibonacci retracements and extension ones. Any particular book on this particular subject, I doubt, because they are largely like topics which people cover. So there are several books, technical analysis. You can refer Martin Brink. You can refer. Yeah, Martin Brink would help you with this Fibonacci in detail to some extent, and then you have like other encyclopedia of the chart pattern also you can look at. Agrochemical, I would recommend to please refrain, because PI, Naveen, barring Relis, I guess all the other names, they are still under pressure. So avoid agrochemical space. Next, we have Rajiv Kumar on oil and gas sector. So energy space is still buzzing. Like today also, ONGC was among the top performer. Reliance, though it's a diversified player now, but still it holds considerable weightage in the oil and gas. So that adds to this, overall positivity in the sector. Then we have OMCs, gas distribution names. They all are doing well. In fact, the OMCs after a pause, they have resumed the uptrend. So, as I've said, that barring select private banks and media, all other sectors they are doing well. So it's just that now, since we have entered into the earning season, it's become very important that what we select and what we do with those stocks before the numbers. So I would rather suggest you, like, to in anticipation of any strong momentum. Maintain your risk management rules in place during the earnings, because any negative surprise and when the good stock can witness a decline of 5 to 10% in no time. So overall the sector looks fine, and I feel that all the stocks are still participating well within this space. Okay, so we'll not talk about any particular pharma name, but stock. But pharma as a sector, we still feel we have more legs on the upside for the pharma majors, and but still we feel that that stocks which are doing consistently well, like Sun Pharma, Lupin, Oro Pharma, Divis, Dr. Reddy's, this should be the preference, because last week we discussed about Biocon being one of the possible candidate of reversal. But again, we are seeing, like, profit taking emerging at the higher levels in Biocon. So the prudent strategy is to stick with the names which are consistently showing relatively higher strength. So you can prefer the other names within the pharma space. Okay, so which MF we can recommend to the customer, index fund or large cap fund? Again, Mr. Prashant, this is something that is not the part of the webinar. So if you're associated with us, you can write to us, through our branch or business partner, and they can, solve your queries. Mr. Sahil, again, we'll try and conduct a separate webinar on, how do we read charts and look for entry and exiting opportunity. But since this webinar is all about, like, how we are seeing the markets, anything related to the webinar, definitely we are here to answer. Mr. Benjamin Robert has that budget is around the corner. Which sectors will perform pre-budget? So it's not a budget; it's just a interim budget, because this is the general election year. So we'll have the final budget post the election outcome. So it's just a formality. Means for the next 3 4 months, how the government is going to manage their expenses, they are just going to share that details. Nothing much. Okay, Mrs. Hetal have asked about sugar sector. Sugar sector has taken a backseat after, like, phenomenal surge, due to this ethanol theory. But now all the top performing names, be it Paraj, which are indirectly associated with this, and then we have Balrampur, Renuka, Bajaj Hind. So now I feel that for a time being, this subdued move might continue, though we have some of these names making attempt of recovery, but I doubt that there will be any meaningful up move, at least in the near future. So for a short term, at least you can avoid. Okay, good time to accumulate AMC stocks. AMCs are already at the record high. So SDFC, if I'm not wrong, had made a new record high after several years yesterday, and NAM India is the other stock which has done exceptionally well. Rest of the name, they are still witnessing catch-up move, but the pace is still very slow. So I feel that among the AMC basket, these two names is something that one can look for buying, but not the current level. Yes, for the long term and for the accumulation purpose, one can look at SDFC AMC and NAM India. Is it a right time to invest in FMCG? So FMCG selectively, yes, you can still look for investment opportunities. Though we are seeing selling pressure emerging at the higher levels in some of these names, maybe due to the earning expectation, and there could be other reasons also. So stock like HUL, the initial up move that we had in the stock in last 1 month it has completely engulfed that move. So still we have like almost if I'm not wrong 1.5 years now with no return in HUL. So this is one candidate that one can look at. If the view is long term, then we have stock like ITC, wherein we are seeing consistent buying on every day. Then we have stock like Marico, Colgate. Colgate is anyways doing well. Nestle India post split is also witnessing some profit taking. So yes, if the view is long term, then definitely you can look at FMCG also for accumulation. See, for the long-term view, I feel that it's too early to say that, let the overall theme uh, emerge. Though we have already seen that, there were multiple news items around ethanol, and that's why we saw this, volatile swings among these sugar stocks. So for a time being, now it's prudent to stay away from the sugar. If the view is long-term, you can check with the financial advisor for more details. All right. Any view in the media sector? So, Mr. Rajiv, within the media sector, Z holds maximum weight, and due to the whipsaws that we are seeing, especially on the negative side this week, uh, we feel that this sector might not perform, except a couple of names like during the week we saw Network 18, TV 18 witnessing exceptional move with volumes. But rest of the pack they are still not participating much. So again, one needs to be selective in this space and don't chase any counter in any of the sectors because any disappointment on the earning front might completely derail the momentum. So if you're just chasing the momentum, be very strict with your stop losses. Now, next week, which sector to focus? So, IT will continue to remain in focus that we believe after this, phenomenal recovery this week. And uh, apart from IT, any sector, I feel that it's more going to be stock specific instead of sector specific. So only IT I feel has broadly that can see recovery or move continuing. Rest it is going to be a stock specific move uh, across the board. Okay, next we have Anjali Singh on the futures of railways and defense sectors for long term for 3 years. So, see, they have done exceptionally well. Earnings are around the corner now. So, though the kind of updates that we receive, like the kind of expenditure the government making and the kind of plan that they have, obviously it looks prudent to stay put. But the stock have run up exceptionally high in the recent 6 8 months. So obviously if your view is 3 years, then look for the companies which are still you know viable or wherein we have visibility for next 3 years, whether it's order or the other things which are there. So as of now, I feel that they are slightly stressed. So from the short to medium term, it's prudent to avoid railways. Defense stocks, yes, BEL, HAL, they are still holding strong. They can continue to do well. Any intermediate consolidation can be considered as a buying opportunity. All right. Rest of these queries are more of stock specific in nature. So yeah. All right. So yeah, with this we have answered all the queries. Thank you everyone for participating. Next week, same time, we'll connect again. Till then, take care. Thank you.